heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Carolyn Hyde and Ed Ludlow.
Carolyn Hyde at Bloomberg's world headquarters in New York.
And I'm Tim Stenovec in for Ed Ludlow. This is Bloomberg Technology.
Coming up, full reaction to Tesla's shareholder meeting as the majority do back Musk's $56 billion pay package.
Plus, Adobe shares surging on the company's sales outlook. How is AI driving demand?
And we head to the G7 meeting in Italy as the Pope warns on artificial intelligence. But first, let's check in on these markets. And it's a day where some lackluster economic data here in the US when it comes to consumer sentiment really dials in and ratchets up some of the risk-on, risk-off concerns that we've got happening in Europe at the moment as we worry about the French political situation. Nasdaq flat, we're holding up relatively well, just down by some 3 points. The S&P 500 fared a little bit worse, and we're seeing the CAC 40 absolutely slump at the moment. I'm ashamed I can't bring you a percentage number on it, but in fact, we've wiped out about $200 billion worth of market capitalization throughout the week in France. That's basically the size of the Greek economy. All gone. Why? Because we are worrying about the political situation, about Macron, about what that might mean for France, even in the EU. A lot being dissected in Europe at the moment, and indeed in the tech situation there too. I'm looking at Euro just off by 0.5% almost. Let's move on and have a look what's happening in the crypto sphere, though, because look, it's not risk off everywhere, and actually we're seeing Bitcoin managing to steady at about 0.4% higher. Small moves for a relatively volatile asset class, but we're still only at 66,937. Maybe a bit of a dial back in what has been never-ending money moving into some of these ETFs. But Tim, what are you watching?
I'm watching shares of Adobe, and there is no dial back going on there. Look at this. Shares having their best day going all the way back to 2020. This after the company did report earnings after the bell yesterday that said that they beat on the top line, they beat on the bottom line, they raised their profit forecast for the fiscal year as well. But it's this one metric that has everybody really excited. Digital media net new annual recurring revenue. Projections for that part of the business did come in above estimates for the current quarter. We're going to have much more on Adobe coming up a little later in the program. And I do also want to check in on what's going on with shares of Tesla today, because it is the day after that shareholder meeting, and it is official that $56 billion pay package was approved by shareholders. We also saw the company shareholders vote on approving incorporation to the state of Texas from Delaware. That move actually already happening, according to paperwork filed after the meeting. Also, some board news coming out of the meeting. We saw Elon Musk's little brother, Kimball Musk, get reelected to the board, James Murdoch as well. Still, shares of Tesla lower on the day today and down about 28% so far this year. Well, earlier today, we heard from ARK Invest's Tasha Keeney on that pay package.
You have to look at the Tesla results here, right? I mean, when you're talking about the pay package, the stock has risen over 1,000% over that time period. So he's really delivered shareholder value. And I'm, again, so excited for the future because we're really on the cusp of autonomous driving today.
For more, let's bring in Bloomberg's Max Chafkin. He's here in our studios in New York. So, Max, I want to start with that pay package. Look, largely symbolic. We've talked about this a lot over the last couple of weeks. But 72% approval, I mean, it's showing that Elon Musk has the support of shareholders.
Absolutely. We've talked about all the challenges, all the craziness around Elon Musk. And at the end of the day, the difference in this vote versus the one that happened in 2018, just 1 percentage point. So it doesn't appear that Elon Musk has lost some huge constituency of support. I do think the conditions have changed to some extent, and there are the reasons for concern remain. But certainly this was a victory lap for Elon Musk, and he acted like it.
Hot damn, I love you guys, is how he jumped onto stage. There were crescendos of calling out his name overall. Look, he was being playful throughout the entire event as well. He was very on Elon.
Look, this is a company that has a huge retail shareholder base. Elon is a business celebrity, and the annual meetings are always sort of rock star affairs. But it was maybe a tiny bit looser, and you did feel like maybe that there had been some stress building up within the company that was suddenly released yesterday afternoon.
Okay, relieving of stress. But then he went back to the bread and butter that is autonomous, back to robotics. I just want to go back to what Tasha Keeney was saying over at ARK Invest a little bit earlier. Let's just listen to what she had to say about FSD.
I think this could have very attractive margins, higher margins than the current business model today, which is mainly selling vehicles.
Okay, so is it reality?
Well, I mean, we heard Elon Musk echo this and, in fact, bring up ARK Invest over and over again in that presentation. They just put out a huge, prediction for their valuation. Elon Musk really likes it.
No way.
Yeah, I think there's a question of what is reality, I suppose. On one hand, Elon Musk is going to say, Tesla fans, bulls are going to say, we have the best driver assistance system on the market. And if you just follow the straight line, Elon Musk said this, if you just look at the trends towards autonomy, we're going to get there. On the other hand, there is no robotaxi today, and there really is no way to get a robotaxi in the way that most people understand that word anytime soon. It's going to require massive regulatory overhaul and tons of technological breakthroughs that, frankly, are not there yet. And Elon Musk is counting on both of those things happening. Now, who knows? He has achieved a lot in his career, but this is a huge jump. He referred to, we're not just writing a new chapter, we're starting a new book. And look, starting a new book, that is a challenge. That is not a given, and it is going to be a real trial for Tesla going forward.
I'm wondering about new vehicles in that book. There was this little tease where there were sort of silhouettes of vehicles under white sheets. An image of that appeared. You think one of those vehicles is, in fact, a very cheap EV that could compete globally with those $10,000 Chinese EVs?
I mean, that is certainly what Tesla's investors, at least some investors, would like to hear. And we saw kind of a panic earlier in the year when it appeared that Elon Musk was backing away from that. I don't think we should look at that slide and say that Elon Musk has a $25,000 EV in the near term. He brought this up in all sorts of ways. He talked about how hard it is to get to affordability, how difficult the car business is. And of course, he talked on and on and on about robotaxis. For him, I think, at least right now, the affordable Tesla is the Model 3. He talked about how cheap it is with all their incentives, when you consider the cost of gas and so on. And where they're really pushing towards is robotaxis and of course Optimus, which if you think a robotaxi is a fanciful product, Optimus is sci-fi or something.
Sci-fi. Well, he's pretty good at sci-fi overall. We thank you, Max Trafkin. Absolutely brilliant to have you here to talk about some of the light moments within what, of course, was that AGM. But there were some serious moments, and one of them was being voiced by Kristin Hull, CEO of Near Impact Capital, who was a co-filer of Proposal 8 regarding annual reporting on anti-harassment and discrimination efforts over at Tesla. And Kristin, you're a renowned sort of activist investor. You go out there wanting to make impact. When you see this ultimate referendum endorsing Elon Musk and his board, do you feel you're having the impact?
Hello, and thanks for having me today. This is a good question because we're here for the long game. We had been long-term investors in Tesla, and we certainly see the promise, both of the AI, of the robotics, but certainly about revolutionary the entire automobile industry. And yet, being at the meeting yesterday had us concerned about where investors are with this company.
That Proposal 8 that Caroline just mentioned was voted down by shareholders yesterday. So I'm wondering where you go from here, given that you were one of the sponsors, one of the ones who brought that to the attention of shareholders. What's your next move, Kristin?
We don't have the numbers yet, and so I'll be really curious to see how many of the investors actually did support the board doing a report looking into how much the company is spending on discrimination and harassment issues. Of course, for this company, Elon said himself several times, he is a pathological optimist. And to be that optimist and to get to the dreams and the promises he made to shareholders, he's going to need to have some really top talent at that company. So to be able to hire and retain that top talent, they're going to need to spend some money and some time and attention on human capital management.
You say within that speech that you gave yesterday, you worry about the human capital management, the workforce management. Year over year, you're saying more harassment and discrimination allegations have emerged with few visible changes to Tesla's people management policies or practices. And in fact, Kristin, I just want to add to the fact that this comes in a context where we're not just talking about this with one company of Elon Musk's. We're talking about it with others, just SpaceX and fired engineers there this week filing a lawsuit against Elon Musk for sexual harassment and for retaliation over in California. Kristin, how much is this a worry, do you think, more broadly?
This is a significant concern. There are thousands of employees that are coming forward. And this is, as you mentioned, this isn't across one company. He is the leader of several companies. And he also said that they're writing a new book. Writing a new book is going to need a full-time author. And when this author has so many cases of discrimination and harassment, investors can be concerned.
Can I just ask you to articulate, you said thousands of employees are coming forward. Where is that data for our audience perhaps aren't seeing the thousands, but are hearing of the odd 8 engineer here and the likes?
That's right. So Tesla is still using forced arbitration, which does silence. It's a concealment mechanism where many of the employees are silenced and are not able to bring to suit. However, many have gone to the state of California, and now the state of California is suing Tesla for racial discrimination based on thousands of reports coming to the state.
Some folks out there do argue that the idea of talent moving between companies is a benefit for Elon Musk. Check out what Tasha Keeney said a little earlier on Bloomberg Surveillance, Kristin.
It's great for talent acquisition. We've seen employees move in between his companies. If you're the top AI engineer in the world, you're not going to get bored working for Elon Musk.
Again, Tasha Keeney of ARK Invest earlier on Bloomberg Surveillance. Kristin, what do you make of what she said? Is there any indication to you that it's not beneficial for these employees to move between companies, that the idea of employees going from Neuralink to SpaceX to Tesla has not been a boon for the companies?
I don't mind the cross-pollination. Certainly, we want talent and we want well-rounded employees. And yet what we're talking about here are sexual harassment and racial discrimination. And those employees are not moving from one company to another. Those are actually being boxed out. And so their talent isn't rising to the top and they're not able to bring their full selves to the workforce. And that's where we're having issues because, as we know, Tesla's been out in front for quite some time. However, much of the industry is poised to catch up, and this talent is moving to other companies within the industry.
Kristin, when you were on the program back in November with Ed and Caroline, you said you wanted to see Elon Musk step down. Do you still, at least at Tesla, do you still want to see that?
So where we're going with this is that we are looking for the board to put in management that really works. And so we saw yesterday at the shareholder meeting, there's a lot of shareholders that really do love the CEO despite his shortcomings. So if we could manage around that, there's no perfect CEO, and yet we do know that leadership comes from the top. And so we would like to see him either really recognize where the human capital management is missing and put that in place, or possibly go on to other projects.
And Kristin, for those that, yes, voice that there's been a market capitalization erosion in the last 6 months, but ultimately back Elon because he has contributed so much value to this business and ultimately to the US economy. Where do you go with the articulation of talent and money here?
So he's a clear leader, right? And in fact, some would say, given yesterday's following, that he's a guru. And many were attesting their love for this CEO. So no one can argue that Tesla has completely disrupted the automobile industry as we know it, particularly with the battery play and then really moving things off grid as far as electrifying our economy. We want to give him that credit. And there's so much potential at this company that can be realized when we know that they are hiring top talent employees and that they can keep them. So we really are mindful that we want to see them working toward a place where discrimination and harassment don't happen at Tesla.
Kristin, really appreciate you coming on and joining us post-shareholder meeting. Kristin Hull of Nia Impact Capital. Thanks so much. Well, coming up, Adobe out with earnings after the bell yesterday, benefiting from the AI boom. Shares rising the most since 2020. We're going to have all the details next. This is Bloomberg. Well, Adobe shares posting their biggest gain in more than 4 years after the company projected strong future sales for its creative products, suggesting customers are adopting the company's new AI-based tools. Joining us now for more is Bloomberg's Brody Ford. Brody, is that a sigh of relief I hear from investors saying, okay, we're not as concerned as we thought we should be about competition from these upstarts and established organizations? Adobe is doing okay.
Yeah, the question for all software in recent weeks has been, are you an AI winner or an AI loser? And investors have whipsawed on Adobe. I mean, I think they were down like 25% on the year before the results. But yesterday evening, they pretty much showed that, hey, people are sticking with our platform and they are beginning to pay for these AI tools. I mean, they introduced their family of models that have now been used 9 billion times, right? I mean, it's not a ton of money from AI yet, but the indicators here are looking much better than anticipated.
It's still notable, though. Adobe is still off by more than 12% year to date. As you said, they've been under pressure coming into this. I'm looking at analyst recommendations. 35 say buy, and in fact, the price target is still well above where we're currently trading. They see going up to about 613 in the next 12 months. What gets us here, Brody? What more proof do we need that they're able to generate revenue?
Well, so much investment in AI right now, as you all have reported, is in the hardware, in the infrastructure. At some point, there have to be application uses for all this AI investment, or it's, why were we doing it? The hope is that Adobe is one of those companies that has Photoshop, Illustrator, these applications used by millions of people, and that once folks are ready to start paying for AI, it's going to go to a company like Adobe. Of course, it could also go to a company like Canva, and that's where the bear case is.
Brody, how important are these safeguards when it comes to copyright to Adobe's business? Is this the moat that Adobe has, the idea that if you use its tools to generate images, those are quote unquote commercially safe?
It certainly hope so, right? I mean, that's a big part of their argument that, hey, if you go use Midjourney, if you go use DALL-E, you might get sued and your CISO is going to be mad at you, right? I think that whether or not folks are going to only stick with Adobe for this copyright concept, it's yet to be seen. I think what's a more compelling argument is that Adobe already has the applications we all know how to use. I mean, am I going to go learn a whole new program based on AI? Or am I going to click the new button in Photoshop that's going to help me generate something and it's not really disruptive to how I already did my work? To me and to many investors, that's the really compelling argument they have.
Laziness. Love it. Brody Ford.
Yeah.
Also presupposes that I know how to use Photoshop, which I don't actually know how to use.
I'm sure you could dust off some of those charms. Brody Ford will show us. We thank you. Meanwhile, coming up, we head out to the G7 in Italy. That the Pope has been urging world leaders to be cautious on artificial intelligence over there, Tim.
Yeah, and you're certainly watching shares of Vodafone this morning, Caroline, because there's some news coming out of the UK.
Yeah, keep a keen eye on Vodafone. Telecom company, look, it's selling off stakes in companies and stakes around the world that haven't been particularly optimal for them. This time they're looking to sell an entire stake in an Indian tower company in block trades. We think it's going to happen as soon as next week. Could fetch up to $2 billion. Up 0.25% for the UK listed company. This is Bloomberg Technology. Time now for Talking Tech. First up, OpenAI has appointed retired US Army General Paul Nakasone to its board of directors. Now, Nakasone formerly led the National Security Agency and will join OpenAI's Safety and Security Committee. That's as the company is looking to bolster its cybersecurity efforts to protect its technology. Meanwhile, recent documents reveal that London hospitals, well, they've known for years about a weakness that left them vulnerable to a recent cyber hack. Now, Guy and St Thomas's NHS Foundation failed to meet UK health service data security standards, and it even acknowledged as recently as April that, quote, cybersecurity remained a high risk. And Microsoft, well, it faced a public grilling on Capitol Hill because President Brad Smith was facing questions from the House Homeland Security Committee related to reports that Microsoft failed to protect government emails when getting into the hands of Chinese hackers. Now, the tech giant pledged that it would overhaul its cyber defenses in response to the recent lapses, Tim.
Now, talking of political discussions around technology, one has been underway at the G7 summit with perhaps a surprising voice to many. The Pope arrived at the conference today and expressed his concerns about AI. Bloomberg's Anne-Marie Hordern joins us with more from Italy right now. Anne-Marie, Pope Francis becomes the first pope to address the group of seven. What can you tell us about what he warned when it comes to AI?
Well, a lot of fanfare around the Pope, given the fact he's the first pontiff to ever address the G7 here in the southern Italy in the region of Puglia. And it comes on the heels of the Pope calling for a treaty to regulate AI. He himself has been victim of AI-generated images. So this is what he had to say to the leaders around the table. He said AI is fascinating and terrible. He talked about the fact that it's first and foremost an instrument, but the benefits or negative consequences will depend on how it is used and how it is deployed. So he really wanted to make this case to G7 world leaders. And what we know, given the draft communique that only Bloomberg has seen eyes on right now, and the leaders will release it later this evening, is this. They are going to say that they recognize the impact of AI on the military domain and the need for a framework for responsible development and use. We encourage more states to do so to ensure that military use of AI is responsible, complies with applicable international law, and enhances intentional security. The only real deliverable, though, we are getting, even though there's lots of talk about AI today at the second day of the G7 summit, is really that they're just going to coordinate more together. But potentially this sets up potentially more work and what the Pope is calling for and has called for in the past, a global treaty.
They're good at talking. And their policy making sometimes a little slower, unless, of course, you're in the EU. Anne-Marie, talking of the EU, much anxiety around France. I mean, the market's selling off hard today, and Macron was there. Anything regarding the French economy? I mean, for us, it's important from technology, but for everywhere else, it's political.
If you think Emmanuel Macron had a bad day yesterday, he had a worse day waking up today after the news last night that these left-wing parties are going to form a coalition and a bloc, and they're coming out and talking about a manifesto and what they would do in terms of some of the reforms Emmanuel Macron has wanted to put in place and has been working on with the French economy. They're talking about lifting wages. They're talking about going back to a lower retirement age. You heard from the French finance minister today talking to local radio stations in France. Really, they are talking about how this is going to be very challenging, not just for the French economy, but this is going to be challenging for Emmanuel Macron. He's really going to be hit now when it comes from the left and the right squeezing him, and he might have to pick someone from this left coalition to be his prime minister, and he came into this G7 really a weakened leader.
Anne-Marie Horden, we thank you so much for coming live to us from Italy. Looks like a tough gig out there. Stay well, have a good trip home. Meanwhile, coming up, we're going to be talking tech from the hardware perspective. Aura CEO Tom Hale is going to be joining us about the momentum and the state of fitness and health tech. Meanwhile, look, we were just talking about France. Well, one French stock was doing really rather well today, up more than 14%. The French government, in fact, despite some political chaos, has been offering to buy some of Atos's operations in big data and security unit. This is Bloomberg Technology. Welcome back to Bloomberg Technology. I'm Caroline Hyde.
And I'm Tim Stenovec in for Ed Ludlow.
Meanwhile, there you are on camera.
Hi.
Let's just do a quick check on these markets, Tim, because we're actually managing to bounce off of our lows. NASDAQ 100 now gaining about a 1/10% higher. Look, the broader NASDAQ index is still underwater by a 1/10%. We're trying to digest some consumer sentiment that, well, falls again. It's rather surprising the market. Inflationary pressure still there for a consumer. Woes, politically speaking, over in France. The market's just shut. We're down by 2.7% on the CAC 40. Look, not as low as it had been earlier in the trading day, but this is an index that's wiped out tens of billions of dollars, the same size as the economy of Greece over the course of the week because of the political instability. Bitcoin, though, on a little bit by 0.3%, 66,899. Move on, see how we're trading on individual names this morning. And Adobe, I mean, you've called it out time and time again, Tim. Absolute phenomenal move, 14% higher, best day since 2020. We liked the adoption of Adobe AI products in the earnings. Tesla, though, perhaps rallies into the AGM and then falls after it, after the relief that is Elon Musk getting the backing of shareholders more broadly. Maybe he won't be jumping ship and doing AI elsewhere anytime soon. We're down by 1.7%, though, after we digest also the Tesla moving to Texas for its corporate headquarters, we understand. On semi, interesting, off by more than 4%. This semiconductor company, I mean, a few woes. They're consolidating in terms of where their fabs are going to be, but they're notably having to let go of some people. About 1,000 people overall were off by 4 percentage points. But we want to talk about another key corporate company, still private, but one that you might know and use well. All eyes on health, on tech, and Apple's latest watch announcements, of course, came earlier in the week. But here's another company in the space that's seeing real momentum, Oura. We want to bring in the CEO, Tom Hale, because, well, you've got some really strong numbers for us. How many people have been buying these rings? Who are buying these rings, Tom?
We're very proud today to announce that we've reached 2.5 million rings sold. We just hit that milestone a couple days ago. And the impact that we're having on millions of people's lives is, I think, just so inspiring for us. It's not just the high end. It's the CEOs and the people who are just getting their first job. It's men, it's women, it's old and young. It's people who are training for marathons and people who are just trying to get out of bed today or managing a chronic illness. It's really amazing to see this movement taking off. Health is important.
Tom, dig a little deeper into the demographics here and help us understand, in terms of men and women, the shift that you've seen. Who's buying the ring right now?
What's been most impressive to us over the last 12 months is this shift towards women. Women's health, I think, has been really a hot topic. I think there's a lot of history where women haven't been paid as much attention to by technology or the medical industry. And right now, we're sort of hitting this sweet spot. In the last 12 months, we've seen our demographics shift dramatically towards women. 12 months ago, we were 55-45, male to female. Now we are almost 60-40, female to male. And I think part of it's a ring. But part of it is that women, I think, really have a real desire to take control of their health, and we help them do that.
And Tom, actually, the ring's working better for women now than when I originally purchased it. Look, I was originally bought a ring by my husband because I wanted to be more aware of my own cycles. And initially, it wasn't that great. But now it's actually really being incredibly predictive. And I'm interested from your perspective as to what you've done on the back end here. What data are you using? How are you able to interpret women's health that much better at the moment?
Well, so much of what's important to women is, one, where they are in their life. Are they at the beginning where they're worried about contraception or conception? Are they getting pregnant? Are they in post-birth? Are they in perimenopause or menopause? That whole cycle, actually, we've been investing in each one of those areas. Most recently, the dynamic around temperature, which is one of the metrics that the Oura Ring tracks, is really powerful for being predictive about a lot of things in a woman's life. It can predict when your cycle is going to come, what phase of your cycle in, when you're maybe most fertile or maybe not fertile. It's a really powerful tool, and I think women really have welcomed the idea that they can have a lot of information, knowledge, and education founded in the data of their own body.
Hey, Tom, I think one thing that members have noticed is that you're able to add different measurements to the ring even after you buy it without buying a new piece of hardware. For example, cardiovascular age was something I saw recently when I opened up the app as a new feature there. What can you tell us about the product roadmap right now in terms of what new sensors will be turned on and what we can expect in the coming months and perhaps even year?
We've made a really lot of progress by investing in the software and activating the sensors that are already on your body. What's powerful about it is that it's collecting your data over a long period of time and looking for deviations in those data. So here's one example that's really interesting. We have a new feature. It's in beta. It's called Symptom Radar. And what Symptom Radar does is 2 or 3 days before you actually get sick, it gives you signals that you might be getting sick and you might want to change your behavior. Maybe, drink more fluids or take some rest or try and avoid stress. And these kinds of features that are really more strictly speaking health features as opposed to fitness features are the kinds of things that people really find a ton of value in. Cardiovascular age, honestly, it's motivated people dramatically. If you learn that your cardiovascular system is older than it should be, older than you are with your chronological age, it really makes you get out of bed and work a little bit harder because you can see that metric move over time. So broadening the software solutions that we provide to people using the ring, we think is going to take us down the path of women's health, cardiovascular health, and I think ultimately we want to look at all the things that are shortening people's lives, whether it's cardiometabolic disease or other disease states that people are worried about or might cause them illness or death.
Well, you're a software company and you're a hardware company, and you charge for both of them. What is the revenue breakdown right now between the software side and the hardware side? What portion of your overall yearly revenue comes from software now?
So we're pushing up on north of 20% is software revenue, and this is a pretty significant milestone for us. We introduced a subscription business model in 2021, and we have more than tripled our active subscription base since then. The reason for this is that people are so engaged. I mean, of course, it's your own data, it's your own body, it's your own health. People are really invested in this. But the reality is it's an incredibly sticky application. People consult it 3 times a day on average. Out of any 7-day period, 80% of our customers are looking at it 5 of those 7 days. The ratio of daily active users over monthly active users is on par with social media. It's just a lot healthier than social media. So this engagement has really driven the software side of our business, and it's increasing.
I just want to talk about engagement with your patents and IP, and actually engagement with the courts a little bit, Tom, because we are seeing that actually you're pretty active when it comes to fighting for your own IP, and some companies feel that maybe they need to make a preemptive strike. We've seen Samsung talking about launching a Ring, and ahead of it coming really to the market, they've preemptively sued you because they're worried that you'd say that they've run afoul of some of your patents in some way. Tom, can you respond to the Samsung claims and indeed what you feel about trying to protect your IP?
Well, I can't really comment broadly on active litigation, but here's what I can say. The law does not support Samsung's position here. And quite frankly, we've already filed our motion to dismiss, and I believe we're going to prevail.
Oura CEO Tom Hale. Tom, thanks for joining us. Really good to see you.
And I just say I really love the way it also, when I have a glass of wine on a Friday or a Saturday, the next day it says, don't worry about it. Everyone feels like this the next day on a Saturday. Meanwhile, look, we got you some breaking news, and I just want to bring what's happening in Apple and the EU. Set for its, well, the first big tech company, really, to feel the ire of Europe under the new EU digital law. We understand Brussels is set to charge Apple over allegedly stifling competition in its mobile app store. And it's the first time the EU regulators are really using these new digital rules, the Digital Markets Act in particular, to target a big tech company. Look, not being factored in much to the share price right now, but we're still off by some 0.3%.
And we'll, of course, continue to bring you any developments or updates throughout the day on Bloomberg regarding this breaking news. Coming up, we are going to be joined by Carolyn Childers, the co-founder and CEO of Chief, to talk about the state of women in leadership. This is Bloomberg.
Let's talk about the C-suite and diversity there. Women's representation in the C-suite has actually fallen for the first time in 2 decades. It's the latest from a report of a non-for-profit 50-50 women on boards. Let's dive into why, and actually a tech-enabled solution as to how things might change a little. Carolyn Childers is with us, co-founder and CEO of Chief. It's a network of senior women executives, in fact, the biggest network there is out there. And what's interesting is you're trying to shine a light on, even if there is this DEI pushback, audibly so, coming from companies and boards, maybe we're still seeing the work being done, but why are we seeing fewer women on boards, for example?
Yeah, we just recently published a study that talked about companies are still making the investment into diversity. 80% of companies are still having the same, if not more, investment into ensuring that they have great representation at all levels of leadership. But as you said, the numbers are not moving. So for the first time in over a decade, the number of women in the C-suite has actually declined. And it's a number of factors, which makes it so hard to find one silver bullet to actually change some of these representation numbers. It's everything from the glass cliff, where women are so often put into positions where they're needing to do a turnaround of a business. It's everything from the real push to bring everybody back into the office, which we know has greater impact on women. And it's why something like Chief, which is really focused on how do we give support and network and community to senior executive women it's still going to be hard to be a senior executive, but at least it will be less lonely and be able to come together to really give each other support.
And let's talk about that support. You're offering sort of more customized membership packages here to ease some of the anxieties that each woman might have, whether it's about executive coaching, maybe it's a little bit more about advisory, maybe it's about education. Once you're there in leadership, how do you attune your elements to be the best leader you can be. How much are you going to be charging for this? How willing are women to spend on this?
Yes. So we are largely sponsored by the companies. So the women go back into their organizations and get them to sponsor their membership into Chief. And if you think about what it costs to get a 6-month engagement with an executive coach, that can often be $30,000 for a senior executive. So our price points are anywhere from $5,900 to up to $11,900 for executive coaching. We started 5 years ago here in New York with just 100 members. We've now grown to thousands of members across the US. And throughout that entire journey, we've been adapting as an organization to really understand what leaders need in this moment. And that changes every year, from when we started to the pandemic, to all of the financial crises that we have seen, to the socioeconomic issues that people are navigating. And so we recently just pivoted as a company to really give a number of different membership packages to our members that can really meet you where you are. So whether that is executive advisory, where you meet with a peer group, your true peers that are going through everything that you're going through to meet on a monthly basis, whether that be one-on-one coaching, because there are times where you just need a little very focused time on you, or whether that be executive education, because there's specific things that you're looking to dive into.
I'm wondering about the company sponsorship element here. We're Bloomberg, we love numbers, we love the data. What happens if an individual who wants to join comes to you and says, you know, my company will not sponsor this. I need to go back to them with proof that this is a worthwhile investment, that it works.
Yeah.
What data do you give them?
Yeah, there's a number of things that we look at. I think success metrics in something like this is hard because success is very different for every individual. And so we really look at how much does this really help change your leadership impact? How much do you believe you are a stronger, better leader because of your participation in Chief? How much do you feel like you have built the connections that help you really navigate new areas that you need to look into? And those are the numbers that we give back to the organizations on top of the broader numbers of how important it is to drive diversity into your companies and what that does for you as an organization.
Okay, so talk numbers here in terms of companies that have not yet signed on. How will you get to 100% participation within the Fortune 100, within the Fortune 500?
We actually have members in 10,000 different companies. So we actually have amazing sponsorship across all of these different organizations. And we continue to build those relationships again and again, but have already made a pretty significant impact into all of the different companies to be able to sponsor their members.
Have any companies pulled away as the pendulum on DEI has shifted?
I think what we're seeing is that people are talking about the investment in DEI a lot less than they're actually pulling back on the investment.
That's something that we noted. We did a whole show on it yesterday. I want to ask about your own capital. You raised a ton of money back in the heady days of 2022, and I wonder whether you need more. You have some big commitments from some very well-known venture capitalists, but this is expensive. Opening clubhouses, you have a lot of them, New York, Washington, and the like, and indeed satisfying the needs of your membership.
Yeah, I think we are always wanting to continue to invest in our members and make sure that they are having the best experience and continuing to grow as leaders. But we're also a really strong business that doesn't need to go and raise capital.
So you're
right
profitable?
Now. We are profitable, yeah.
Yeah, so hear that, VCs.
Very, very cool. Maybe breaking a little news here on Bloomberg Tech. Carolyn Childers, co-founder and CEO of Chief, thanks so much for joining us today. Well, coming up, we're going to look at the timeline for the launch of Ether ETFs this summer. This is Bloomberg. Well, the highly anticipated launch of Ether ETFs could be coming as early as this summer, according to SEC Chair Gary Gensler. Bloomberg's James Seyfert joins us now with more. James, how do you take Gensler's recent comments in terms of your own thinking when it comes to an actual launch date for these? When will investors, do you think, have access to this, at least according to Bloomberg Intelligence?
Yeah, I mean, when these things were approved towards the end of May, we basically said they'll be out probably by the end of the summer, possibly earlier. So our overall take has been for a long time, these things are likely to begin trading sometime this summer. We put the over-under around the July 4th number. We thought it could happen by early July. There's a lot of overlap you can take from the launching of spot Bitcoin ETFs and the launching of Ethereum futures ETFs. They had to go through like similar processes with these divisions at the SEC. So there is some new stuff here specifically with spot Ethereum, but we didn't think it would take as long as it took for spot Bitcoin. So just to put some numbers on it, spot Bitcoin started in early October. They launched on January 10th. So that's a 3-month process. So we think it should take less than that. We think a lot of it is done. But based on what we're seeing right now, all these issuers submitted their documents for registration, this last step of the process to get these things approved by the SEC fully, on May 31st, and there hasn't been any movement as far as we can tell from the SEC. So the SEC is also in no rush at this point. But I think it's unlikely that it would take anything beyond the summer, and we were saying that weeks ago. So I feel like Gensler saying that in front of Congress didn't really give us any more insight than we already had. But time will tell.
The players, VanEck, ARK, BlackRock, Fidelity, the same names as we saw with the Bitcoin spot ETF. Is there the same desire to be offering these ETFs this time round to match what might be slightly less demand?
Yeah, so we do think the demand will be slightly less, but we still think, I mean, you're talking about slightly less demand versus the most successful launches in ETF history across the world, some of the most successful fund launches in history across the world, right? So even if you get 25% of the flows, which is kind of the range that we're thinking, 20-25%, maybe more, part of that goes back to the fact that Ethereum is about 30% of the size of Bitcoin. So there is going to be a little bit less demand. But again, there is a lot of issuers that stepped out of this. Technically speaking, 3.5 issuers jumped out of this. So WisdomTree, Valkyrie, and Hashdex fully are not launching ETFs. Yeah. ARK and 21 shares partnered on their Bitcoin ETF, and ARK is now backed out. But we do have one new issuer in ProShares for this Ethereum raise. So most of the same players are still in this.
James, lift the lid on the gossip a little bit as to why people might get out and ultimately what people feel about the SEC process. Because I'm hearing behind the scenes a lot of the time, this stop-start, this sudden desire to have all your documentation and then go quiet. I mean, it's exhausting, and many feel that there's more challenges and more hoops to jump than is necessary.
Yeah, I mean, what's really happened here from our point of view and from what we're seeing and hearing, a lot of this has become political. It's not like just normal going through the processes of doing these things. It seems like this approval actually happened on the back of political wind shifting, which is part of the reason why we don't know when this is going to launch, why there's such a large gap between the 19B4 approval and the S1 registration approval. So a lot of it has to do with the fact that this has become so political in nature. But another reason why people have backed out is the fact these things are not going to allow staking. Right now, if you can stake Ethereum, that's a 3 to 4% yield. So that's almost like a fee that you're missing out on. So there's a lot of inefficiencies potentially here, but the main reason that I think this is some of these issuers have backed out is just, one, fees got so competitive. We saw a massive fee war launch before the Bitcoin ETFs even launched themselves. So prices compressed to the point where issuers aren't really making that much money. And throw in the fact if you're a smaller issuer, you have to compete with the behemoths of BlackRock, Fidelity, Invesco. So some of these issuers have done well to compete with them, right? But it's very hard to basically start from day one against those guys. A lot of these smaller issuers benefited from launching before them, coming out with new products. Right here, when the Bitcoin ETFs launch and when the Ethereum ETFs launch, they're all starting out at the same gate. And it's really hard to compete with somebody with that much distribution and size.
James, I know you do not do price targets over at Bloomberg Intelligence, but I am curious about the price of Ether, because we're still not back to those 2021 all-time highs, whereas Bitcoin did hit an all-time high just a few months ago in the wake of these spot Bitcoin ETFs. What can you tell us about the way that you're thinking about price movement when these ETFs do become available for investors?
Yeah, I mean, the consensus for Bitcoin from the market was like it's going to be a buy the rumor, sell the news. And it ended up kind of being like that initially. But once money started pouring into the funds, obviously Bitcoin's price ran. And the ETFs are a large reason why we've seen those all-time highs in Bitcoin. I guess it will depend what happens on the flows on the back of Ethereum, right? So if the Ethereum ETFs launch and they do not see as much interest as people are expecting, or they see more interest than people are expecting, we'll see that run and we could see all-time highs. But I think Ethereum is kind of caught in the middle here. There's a little bit more going on. Bitcoin has this narrative. It's digital gold. It is what it is, right? Ethereum is like more the internet of money, an app store, what have you, and there's a lot of competitors. So I think part of the reason that Ethereum hasn't caught and run alongside Bitcoin is the fact that it's competing with the likes of Solana and these other coins.
James, Always such great inside track. We thank you, James Seifert of Bloomberg Intelligence. Meanwhile, that does it for this edition of Bloomberg Technology. Happy Friday. Great to have Tim here in the spotlight with me. Don't forget to check out our podcast. You can find it on the terminal as well as online on Apple, Spotify, and iHeart. This is Bloomberg Technology.